Hello everyone, it's great to be back to talk about our fourth quarter 2013 and the full year 2013, which was a great operating year. Again, we exceeded our guidance both in terms of production and also in terms of cash cost. And I think what was important on the cash cost side is we beat our guidance, which was revised downward. We still beat it, and we were impacted by much lower byproduct revenue. So the performance was even better than it may appear in the numbers. And in fact, in the fourth quarter, it was a quarterly production record where we produced over 320,000 ounces at cash costs a little over $620 an ounce. And our all-in total sustaining costs are less than $1,000 an ounce. So we've done a very good job of lowering our costs and responding to this lower gold price environment. We have to manage to our conditions. We can control our mines, we can't control the gold price. We've paid a dividend for 32 years, but it just made sense in this lower gold price environment to reduce the cash outflow that we see from a dividend. That increases our financial flexibility going forward and lowers financial risk for the company. So by effectively lowering the dividend, our cash outflows have been reduced by, on an annual basis, by about $100 million. A lower gold price also impaired some of our short life assets and also the carrying value of our project at Meliadine. These are non-cash charges. They have an earnings impact, but they don't have a cash flow impact. What we also did to adjust to a lower gold price environment, and this is very important for the future, is we redid our reserves at $1,200 an ounce. What that did is it reduced our mine life slightly, but it increased the quality of those reserves. We saw an 11% increase in the grade of our reserves. Our reserve grade is now 3.5 grams per ton. The average reserve grade in the industry is closer to 1 gram per ton. We had an outstanding 2013, as we've said, from a production and cost point of view. And we also built 2 mines over the last couple of years. So that sets us up perfectly for 2014, where we've also announced an upgraded guidance, both in terms of production and lower costs. We've got more growth in 2015 and 2016. So our team over the last 2 years has really built our operating platform to the point where we now have good, solid growth right through 2016 from assets that are already producing gold. It was great to have a solid 2013, but I think more exciting is how that sets us up for the next 3 years.